Do you think the markets have sort of factored this in already, though?
I do. I think this is a pretty consensus call, and it's consensus in three ways. One is lower growth this year. Two, it's not a recovery lost, it's a recovery postponed, so they didn't bring down next year. In fact, they took up next year, which suggests that you can catch up on it. And underlying this is the paradigm in the marketplace that this is about demand, that the supply issues will go away. I'm not so sure about the supply issues going away, Melissa, but that is very much a conventional call.
How big of a wild card is the supply chain issue and supply constraint issue as you think about the last quarter of the year?
Huge, absolutely huge, because they are so persistent and they're cascading. So this is no longer just about supply chains, as disrupted as they are. This is about transportation, about containers, about port congestion, both at the port of origin and at the port of destination. And it's about persistent labor market shortages. So it's a big issue that we haven't gotten our arms around it yet. I think companies are much more advanced than policymakers and market participants are about this.
Meaning their view of inflation is more prolonged than just transitory? I mean, I'm curious because, you know, the underpinning to the transitory argument had been that anything arising from supply chain disruptions would be short-lived, and yet we have companies coming out, you know, on their earnings call saying it's going to last much, much longer than they had thought, maybe even stretching into early next year.
Yeah, and that's something that I've been concerned about for a while, that people got so focus on base effects and other imbalances that they didn't realize what really was going on the supply side. Yes, it is going to be longer. It's going to be longer both for materials and for labor. And that is not an issue that's factored in. You know, the Fed still believes it's transitory. And unless it extends transitory to include 2 years, this is not going to prove transitory.
Yeah. What's your expectation at this point for taper timeline, and then separately for rate increases?
So my expectation is that the window to taper is closing. They should have done it. They haven't done it. Now they have a weak jobs report. I think the market is absolutely right in saying that we're not likely to get an announcement until December, which means we're not going to start tapering till next year at the earliest. And yet yields are edging higher because yields are also starting to recognize the supply disruptions.
So could the market actually do the Fed's work anyway? I mean, even if taper gets postponed and then therefore rate increases get postponed, we could already feel the impact of higher rates regardless.
Yeah, I don't think they could, because you don't want to be taking a bet against treasuries when you have such a massive buyer, and it's a non-commercial buyer. Always remember, Melissa, it's a non-commercial buyer. They're willing to make losses on what they buy. So very few in the marketplace will take on that massive buyer. So there will be a limit to how much tightening the market itself can do. This is not the old days where the market could do the tightening for the Fed.
When we think about taper timeline, Mohamed, or when you think about it, does that mean rate hikes follow shortly afterward, or are these two decisions divorced in your opinion?
So I think they are related, but their impact is very different. I don't think tapering will have any major impact on the economy. Rate hikes is a different issue. Rate hikes will have an impact on the economy. So I view them as related because you can't have rate hikes until you've gotten through the tapering, but they are very distinct in terms of their economic implications.